Hi guys, this is Simon with Trade and Perform Coaching doing the trade review for Friday the 25th of April. Let's just jump right into it. This doesn't have to be an overly complicated trade review. Friday really wasn't all that difficult today. It was pretty straightforward. So you'll hear me talk a lot about rotation size, right? And that also, because we've been having a rash of open drives higher, what does that mean? It means either the first bar is a very large bar down or a very large bar up. Usually it's about 6 or 7 points, right? Or it's a series of smaller bars, right? Usually it looks something similar, not exactly, but similar to this. Now I really wouldn't count this as an open drive lower, but it's 1, 2, get rid of the green bar and make this third bar the red bar like that, and that looks awfully similar to an open drive lower. That's picture perfect. But it can look like this too. So let's go for the clues right out of the gate. What would have been some of the issues you're dealing with, right? So we're looking, first of all, who's stronger and who's weaker. This is Thursday's low right here on ES. It would not have been at all unusual to get a test of Thursday's low, trap back above, and then make a move back for half gap, right? So if you look, first of all, the first 5-minute bar, okay, the high of the day was never penetrated again after the first 5-minute bar. That's one clue. Number 2, we did break below Thursday's low and trap back above, but by the end of the first hour, right, this is our reversal time, notice that we've been unable to challenge that first 5-minute high, right? In addition, gap fill is all the way up here. We have no half gap and we have no gap fill. So those things right there should be setting off alarms in your head. Hey, we've got weakness. This doesn't look good, right? We can't generate any upside move in the first hour. No problem. That doesn't mean that you can't take any longs. It just means that you should be drawing your eyes down lower, right? What's the normal type of pattern that we get on most days, right? Most days actually start like this. Lower days come down, come back up about midway, and then in the afternoon we get a decision time as to which way we're going to go. Look how the pattern worked on Friday. We opened lower, all right? Buyers responded, and I had pointed out this 1861 and a quarter is the last location, right? And I was cautioned. I put poorly auctioned below, right? What does poorly auctioned below means? It means it can move through those lower levels very easily without any rotation back up. Okay, so we get to 1861 and a quarter. I didn't make it a zone, and I went through in the market preview why it wasn't a zone, but that it was a valid area. Okay, we come in, we test it once, we get a counter rotation. This is Globex low. This is a critical area. We've fallen below the prior day's low, and we did not snap back up on the first trap attempt. Okay. In the meantime, while this is going on in this area, and you're trying to figure out this day, right? Slow down for a second and take a look over here at Mr. NQ. Now NQ, okay, is immediately, let's try this again. That's interesting. Okay. There we go. That'll fix that problem. Mr. NQ is trading below Globex low. Okay. Secondly, the low of the day by 9:30 a.m. Notice how on NQ we try to trap above, and I had pointed out there's structure right on top of this. Okay. Gap fill, just so you get a clear picture. Gap fill on NQ is all the way up here. That means that puts half gap from the open right about here. Now, notice, importantly, on half gap, okay, on NQ has been leading us up and down. I stress that every single morning. The first thing that you know about NQ, right, is if we're going to have any strength, it's going to have to make a run for a half gap, and it cannot get above this bottom of prior structure where, had this happened during the day, I would have normally expected responsive buying. We were below it, so we got responsive selling out of it. Okay. The next piece, when we get down, okay, see this whole area? This is between 9 and 9:30. Look how NQ can't get up off the floor. Okay, look at ES at the same time frame. ES, same time frame. We've come in, we've gotten below Thursday's lows, but we've gotten responsive buying off that last little area of support, 1861 and a quarter, and it gave us a nice rotation back up, about 5 points, right? Right into Globex low. And that's where we rejected. But look where we rejected. I've been reiterating, NQ's been leading us lower. So look at this piece right here. Okay, we cannot get up off the mat here. we break lower. This is at 9:30 right here. I want to say, so this is the close, first hour low right here, and it's broken below prior day's low. NQ's in trouble here at this point, guys. And so if you're trying, so two things. If you're short, right, obviously let your shorts run. We have some room to the downside. But secondly, if you're sitting here in ES, wow, I hate switching. It just messes with my dyslexia. If you're sitting here at the same time on ES, and you're right sitting here on support, and you go, NQ just broke below prior day's low. There's no there's no responsive buying whatsoever. You might want to go, I'm clearing out, right? Especially if you were leaving a trailer from here. Well, you should have gotten stopped, right? But you should automatically be going, potential of a much larger down day than what we have right now. And then, so you should have drawn your eyes. I really thought we had a shot, and we may get this on Monday. I'm not certain, obviously. But I thought we had a real shot at 1849 to 1851. Guys who bought here and held all the way through this, I don't know who that is, but that's not anyone who has super leverage, I can tell you that. And remember, my objective is to trade leverage, strong leverage, big leverage, into these areas and get my 2 points, get the heck out of Dodge. And as my friend Ben likes to say, that this is a blood, what do you call it? Blood sport. So, and he's absolutely right. And they had some bloodletting here. So, do the rotation size in your head, right? Like this is from 1866 right down into 1855. The back of this is 11-point rotation. The middle is a 10-point rotation. If you go off the top, it was actually a 13-point rotation from the top. Okay. We also had tick divergence right into this area. If you'll pull up a 1-minute tick chart, you'll see that we had tick divergence in here. And then the other thing that you'll notice is that if you look on a very small time frame, you'll see that we actually stopped and sat there at 1855. And the last piece that I want to reiterate, I realize that I've probably gone on way too long at this point, is that look, my stop at the zones. I believe that we will get a rotation out of each zone, first time into the zone, from both from the bottom and from the top. The point of the rotations, right, is to help people with, well, I don't want to say less skill, but less experience, right, figure out whether the zone is worth taking or not going to take, or not taking. My experience has been the first time into the zone, the majority of the time, and I mean by that, I'm talking about the last 10 years, okay, the majority of the time, first time into the zone, that you can expect a counter rotation back to the upside, okay, usually of 2 points, or if it's coming from underneath, back to the downside. So look how this day went in terms of how the zones work. We obviously opened right on the zone. We rotated right down to this 1861.25 where we found responsive buyers. Back up into the zone where we found responsive sellers the first time in. We rotate down 10 points right into the zone with tick divergence, and your risk is 2 points back here, right? You get a counter rotation up, and this rotation is up from the back from 1855 all the way up to 1862. That's 7 points. This is the only trade, guys, if you want to build your trading account, that's the only trade you needed all day right there. The only trade you needed, right? If you cannot see your way towards taking 1 or 2 trades a day, consistent high odds trades, and building your trade account, trade by trade consistently, day by day, okay, you're going to have a hard time succeeding as a day trader. It's the inconsistency. Every trader on the face of the earth has his days where he hits those big paydays. The difference is, on my days when it gets slow, or even over weeks sometimes when it gets slow, my drawdowns are so minimal that they don't affect my account in a massive way. So one other thing that I wanted to point out too, I had pointed out that this was structure down here, this 1861.25 was important. So when we came and tested it from the downside right here, I called out, I wasn't able to call this out. By the time I was in it, it had already moved significantly, and I just didn't have time to tweet it. So 1855.25 was my entry. Not a big deal one way or the other. I did tweet out that at 1860, I had taken the short right here, and what I did was to compensate. So first of all, I was a little early. The structure was really, I should have been patient and waited for this 1861 1/4. Probably pulled the trigger a little too fast here. I've made some adjustments for that for Monday. But secondly, I knew that this would be a more challenging area in here because I knew that if we got back above this 1861 1/4, they would try to push it. So I put a stop at 1864, which is basically just a tick behind Thursday's low, and I cut my trade size. Why did I do that? Because I knew I needed to give the trade some room there due to the volatility that we've experienced. And if you look at how long what I did for myself, look how long this trade took to actually work out. From the time I entered it, it's approximately 10:30ish, right? And still by an hour later, I'm still sitting and down on this position, right? But what I did for myself is, because I knew that would be a harder area, I can't say how I knew, but I just thought it would be a harder area, that I reduced my trade size so I could give myself the time to let the trade work out. And I also made the commitment when I was going into that trade that this is either going to lose me 4 points on half size, or it's going to pay me. Now, at the time, when we finally rotated down to this 1858 level right here, I was encouraged by I was coaching Alan, and he encouraged me. He goes, "Aren't you going to take your money?" And he was quite right, because I was actually shooting for beyond this. I was shooting down for new lows and to get to the zone below. And so I covered half that trade, and I tweeted it out at +2. I tweeted out again that we were at this point +4 on the trade right here, that you might want to consider taking some money off. And then at one point, right, we were up almost 7 points right here on this trade. I covered the last little bit right here at 1857 was the last bit of that trade that I covered. So the point that I wanted to go with is, first of all, you didn't have to get involved in all this mess and figure this out and be up or down to still have two beautiful trades, right? The 1860 trade, which paid very nicely, and had I entered it better, I actually could have stretched that obviously out to almost an 8-point trade. And so notes have been made to see if I can improve on that next week on my trade location. Particularly, it was harder because it wasn't off a structure that had been created prior to today. And then the other part of that was that NQ, again, all day long, if you look in terms of looking for strength or looking for weakness, look at NQ. There we go. Okay, look at this at the same period of time, whereas ES was trying to, and I'm going to show you this so that we're on the same page. At this time right here, ES is just trying to get back to Thursday's low, is all it's trying to do, right? Here's the first hour low right here. It's trying to trap above, and we're stuck right below this structure. Look at what NQ is doing at this same period of time. They're not making it easy, are they? This is that same period of time. This is the first hour low on NQ. It can't even head fake a trap above. It can't get above prior day's low. Okay, so this is telling you a lot. So where I would leave you with all of that is a couple of things. Most of my clients got that first trade into the zone and the counter rotation up. They got 2 points, and most of them got trailers off of it. Almost none of them took the 1860 short. That's fine. It's not on the trade plan. Anyways, that was kind of an audible that I call in markets when it sets up properly. And the last piece was, if you simply kept your eye on NQ, it would have been pretty hard to get smoked to the downside on ES, because you should have been able to identify very early and throughout the course of the day that there was extended weakness, lower highs, lower lows all day long. Okay, and then of course the last key for my coaching clients, I'll point out again, after lunchtime, balanced market. Right here, we've had this almost every single day. And guys, coaching clients, go to your balanced market trade plan in the afternoon. There's money in NQ to be made off of that in the afternoon periods if you've brought your scalping win percentages up high enough to actually do that in real time. So at any rate, guys, that's what I have for today. Remember the key and I posted on the Twitter stream over the weekend. Okay, someone had written an article about how they had drawn down so severely in the last couple of weeks on their portfolio that they were actually going to complete liquidation. This is a guy who has a lot of experience and has had a lot of great market reads. Apparently, the carnage has been pretty severe in some individual names out there, and the key for a trader to build a trading account is the day in, day out consistency. And it takes time to raise your game level to where you can have, even executing 5 or 6 trades in a row properly is a real mental challenge for most people, myself included. Okay, so and what does that mean? Okay, so it does you no good if you can get 2 trades in the morning that are profitable, and then you give back all your profits in the 2 trades in the afternoon, right? The area where most traders fail is they cannot stack trades together in a consistent row, not just day over day, week over week, but month over month and year over year. And that's important, right? Because where most moderate retail day traders end up is either break even to slightly lower, and if you suck, you're blowing up your account. Okay, that's just the reality of the situation. What everyone wants is they want to be able to stay busy enough in the process of the course of the day of analyzing that they feel like they're working. But you have to remember, in trading, you don't get paid by the trade, you get paid by the profitable trade. And it can take 10 minutes to make that money, or it can take 10 hours, doesn't matter. The market doesn't demand time in that fashion. But what it does demand is consistency in entry and exit, or otherwise it will do everything it can psychologically to bombard you into making poor trading decisions. And it does that on a minute-by-minute and day-by-day basis around the clock. That's just how the thing is structured. The way to combat that psychological warfare, which is what I refer to it as, in the marketplace, is by A, having a written trade plan that you're held accountable to. B, by having a proven edge that you can execute day in, day out. And 3, having structure built around that, meaning before I enter the trade, I know where I'm going to enter, where my stop is, where my profit target is, and how I'm going to structure in and out of that trade. That keeps me making as little decisions as possible. When I've made all of those decisions before the market opens, I'm not susceptible to the quick flashes and changes and pace that the market throws at you to try to force you to get emotional in your decision-making process. Okay, and it either works or it doesn't. But if you're listening to this, right, and you've been trading for a while, you've probably heard someone go, or yourself, more likely, right, go, that was not my trading plan. Why did I do that? Is a question that often gets asked, right? And then if you look why that happens in real time, it's because you take the pressure of actually having to make that decision in real time. B, you haven't made the commitment to that area, whatever area you're trading in, before it got there. And so the wiggles and the whips and the strength of the move caused you to get head faked out of that trade, or to go enter that trade in a place you did not intend to, right? And generally the rule of thumb for me at least, is once I make a trade that's off plan, everything else is foobar. As soon as I'm in that trade I'm off plan, I'm immediately looking at every little tick that's going on. I'm looking for any evidence that will help me to make that trade work, and I've completely forgot about my entry structure, my exit structure, my stop structure, and I've completely forgotten about what I'm trying to do over time, which is build profit day by day by day. So I didn't say that very eloquently, but that's exactly how it works. Is you take that trade, it's off plan, you're frustrated, you're no longer making any kind of decision based on any kind of plan or structure that you can go back to, and you're floating in space, and you're at the total mercy of the market in every little tick. And it usually leads to disastrous results. So I hope that gave a little insight into my decision-making process. I would encourage everyone out there to have a written trade plan, to know exactly what your trade is, precisely, be able to detail it and explain why it's an edge for you and how often that works. And then have a plan for stops, entries, and exits, and your stop for the day. And I think that should help you at least start to see where some of your trading problems are. With regards to drawdowns, because I've spoken to a lot of people in the last couple of weeks who've drawn down severely, not my coaching clients, but just people outside. If you're losing more than 20% of your account, stop trading and start paper trading is generally my rule of thumb. Okay, until you can build a track record on paper. There's no need to draw down 20% in this market whatsoever. Zip. This has actually been a great trading market for the last couple of weeks. And when you draw down those accounts so hard, it's very hard to stay to a trade plan because all you're concerned about is whether you're going to make money and recoup what you've lost, and that's all you care about. And so instead of focusing on the market structure, your entries and exits, all your focus is what's my P&L and how quickly can I get my account back? Because I worked so hard for this money to begin with, just to hand it out to some random trader out there in space can be very frustrating. Okay? Don't let that be you. Stop if you're down 20% and go back and find an edge. And even if that edge doesn't come from me, right? Contact me. It's tradingperform@gmail.com. My name is Simon. And ask me. I can tell you there's a lot of great guys out there with great trading plans and different from mine. They're not necessarily day traders. Some of them are day traders. They just look at the market differently than I do. And I'm happy to refer you over to those guys. Some of them charge. Some of them don't. Right? But if what you're doing is just getting your ass kicked on a daily basis, you need some help. And there's a lot of good help out there. Contact me. I'll be happy to steer you in the right direction. I hope everyone's having a wonderful weekend. I'm going to set up the charts for tomorrow, and I hope everyone has a great night. See y'all soon. And market preview tomorrow morning, 7:45 a.m. We'll talk to you then.